In our first entity session, we're going to talk about sole proprietorships. What is a sole proprietorship? Well, basically, sole proprietorship is a business that is formed by an individual who performs services or sells products, and usually they'll get a 1099 at the end of the year from various companies or whoever employs their services. Or if that's not the case, they just run it as a regular business using their individual's name, or they say, Joseph Jones, known as Joseph Jones Bakery. There's no Inc. at the end of the name, there's no LLC at the end of the name, and basically you're just carrying on business as an individual. What this entails, tax-wise, is you'll file what's called a Schedule C. The Schedule C will go on your personal return. You'll file it at the end of the year, and it's due on April 15th with your personal tax return. So essentially, it's part of your personal tax return, your 1040. So you'll just normally have regular income and expenses. So you'll take your income and all your expenses, put it on the Schedule C, and you'll usually pay a couple of taxes. One of them is called self-employment tax. Self-employment tax is basically at the end of the year, once you completed this Schedule C, you'll see what your net income is. And that'll be your gross income, which is all your sales or fee income or consulting income, and you'll subtract your expenses from that, and that's your net income. On your net income, let's say it's $100,000 to make this easy. What you'll pay is self-employment tax. So self-employment tax is basically Social Security tax and Medicare tax. Social Security tax is 6.2%, and Medicare tax is 1.45%. Now, that's not the only thing you have to pay, because what you're paying is double that because you're self-employed. So basically, you're employing yourself and you pay the employer's tax as well. So that'll be another 7.65% combined. So essentially you'll be paying 15.3% self-employment tax. And that self-employment tax will go on your personal tax return. And they give you sort of like, it doesn't exactly come out to 15.3%. They give you a deduction for including the self-employment tax. So it comes out to like 14 point something percent, but essentially that's just one of the taxes that you'll have to pay. The other tax is basically income tax. So if you're in a 20% bracket, you pay 20% on top of 15.3%. If you're in a 36% bracket, you'll pay 36% on that income. So that's basically how a self-employed individual will pay taxes. And the disadvantage of that is whatever your net income is, in this case $100,000, you're paying 100% of the Social Security tax, both the employer's portion and the employee's portion, which comes out to about 15.3% on top of income taxes. So that's one of the drawbacks of the self-employment tax. And that's basically it for a self-employed individual.